Welcome back to Investing Talk Podcast. Today, we're taking a look at Purecycle Technologies. We've got a few pieces of source material you shared, looks like a due diligence report, an investment analysis, and a recent business update from them. Our goal here is really to unpack what these materials tell us about Purecycle, where they stand right now in mid-2025. It's clear they're still in the early stages, definitely, but there's some recent progress mentioned that seems worth digging into.
Absolutely. It's an interesting one. Still early, like you said, but hitting some milestones.
Okay, so let's maybe start with the basics. Purecycle Technologies, they're a U.S. company, right? Focused on advanced plastic recycling.
That's right. Their core thing is this patented purification process. It targets waste polypropylene, the number 5 plastic you see on containers. And the whole idea is to take that waste, which is often hard to recycle well, and turn it into a really high-performance resin. They call it Pure 5.
Pure 5.
Got it.
And the big picture is creating a circular economy for that specific plastic, less reliance on fossil fuels for new plastic.
Exactly. That's the goal. A closed loop for polypropylene. And based on these reports, they just hit a pretty big milestone on that journey.
Oh, yeah. What was that?
Well, the reports all highlight this. In the first quarter of 2025, Purecycle actually recorded its first ever revenue.
First revenue. Okay, that is significant. After all the build out and R&D, actually selling something.
It's a critical proof point, isn't it? Shows the tech can, actually produce something people will buy, even if it's small to start.
Right. It feels like a real shift from just construction to actual operations. Speaking of which, how are things looking at their main facility? The one in Ironton.
Yes, Ironton. The business update you sent over has some good details. Their operations seem to have improved quite a bit. They apparently achieved consistent daily production of that Pure 5 resin in April.
Daily production, okay.
And maybe more importantly, the facility hit nearly 90% on stream time during that month.
Wow, almost 90% uptime. That sounds pretty high for a new chemical recycling plant, doesn't it?
It really is. These kinds of processes can be, notoriously tricky to get running smoothly and reliably. So hitting almost 90% suggests they're really getting a handle on the manufacturing side. That's a good sign operationally.
Yeah, that uptime number definitely jumps out. Seems like a key hurdle. And the reports also mentioned something about different product versions.
They did. They've introduced something called Pure 5 Choice Resin. It sits alongside their original Pure 5 Ultra.
Okay. So maybe different grades for different uses.
That's likely the idea. Tailoring the recycled material to meet various customer specs or maybe price points. It's just they're starting to think more like a mature commercial operation, segmenting their market.
Right. So operationally, things seem to be moving, making this stuff consistently, diversifying the offering slightly. Let's switch to the financials, though, as we said, got to keep in mind it's still very early days.
Precisely. Context is everything here. The financials reflect a company just starting out commercially. So that revenue number for Q1 2025, the sources confirm it was that initial $1.6 million we mentioned.
Right. The first ever.
And the reports are very clear. Future revenue growth really hinges on how these customer trials go and whether the market actually adopts their material in volume.
Makes sense. What about the bottom line? Did that first revenue mean they actually turned a profit?
Well, interestingly, the earnings per share for Q1 2025 was reported at $0.05 per share, 5 cents.
Okay, positive 5 cents. How does that compare?
Well, compare it to Q1 of 2024, where they reported a loss of $0.52 per share. So yeah, 7.5 is tiny, but it's a big swing from a year ago. It shows, some movement towards being in the black, even if it's just barely, and at this small scale.
Okay, so a small reported profit, first revenue. But when you think about the usual metrics, investors look at PE ratios, free cash flow, that sort of thing. What can we actually use for Purecycle right now?
Yeah, that's the tricky part. At this stage, a lot of those standard metrics, they just aren't very useful or even applicable yet. Okay, technically you could calculate a PE ratio because EPS was positive 5 cents, but it doesn't tell you anything meaningful about sustainable profitability, right? You can't really rely on it.
Right, it's based on 1 quarter of very small profit.
Exactly. And things like free cash flow, return on equity, price to book, dividend yield, even beta. They're either not available because there's no history or they're just not reliable indicators yet. The company's pouring money into building things, not generating stable cash flow out. That's the phase they're in. These metrics need more history, more stability to be meaningful.
That makes total sense. They're deep in that capital-intensive phase. And speaking of capital, building these plants isn't cheap. What do the sources say about their debt situation?
Yeah, the reports do flag that. Purecycle has some pretty substantial near-term financial obligations. Looks like around $56 million in debt service and equipment payments are due within the next year.
56 million. Okay.
So that's a significant chunk of change they need to manage. The sources don't give a specific debt-to-equity ratio, but it's clear they've needed and taken on debt and raised equity to fund everything.
And how have they been funding that recently?
Yeah.
To cover those obligations and keep building?
Well, according to these reports, they just recently raised about $63.4 million.
Okay.
Came from two places mainly. About $30.4 million from selling revenue bonds, and another $33 million through a private placement.
A private placement, selling shares directly.
Yeah, it looks like they issued around 4.1 million new shares at a price of $8.07 per share in that deal.
$8.07 per share.
So that capital raise, it shows both the ongoing need for cash, obviously, but also that, some investors were willing to step up and provide that cash at that specific valuation fairly recently.
Right. So the financial picture is, well, it's early. Limited revenue, tiny reported profit for one quarter, but big capital needs and significant debt coming due soon. A real balancing act you often see with these kinds of scale-ups.
That sums it up well. It's the classic profile of scaling a new capital-heavy technology.
Okay, let's maybe shift gears then. Talk about the business itself. Where does Purecycle fit in the market? What's their edge?
Well, looking at the bigger picture, their main competitive advantage, according to these sources, is clearly that patented purification tech. Being able to take difficult polypropylene waste and theoretically turn it into something almost like virgin plastic. That's their core differentiator.
And if they can do that reliably and scale it up?
Then potentially, yeah, they could have a cost advantage compared to making virgin plastic, or maybe even compared to less effective recycling methods, assuming they get the scale and efficiency right, of course.
And where do they sit in the overall recycling industry landscape right now?
Yeah.
Leader, follower.
Definitely positioned as a challenger, I'd say. They're trying to disrupt things, particularly for polypropylene, with this advanced chemical recycling approach, rather than just traditional mechanical recycling.
And the timing seems pretty good, right?
Yeah.
There's a lot of pressure now for more sustainable materials, more recycling.
Absolutely. The whole industry context is pushing in their direction. You've got consumer brands wanting more recycled content. You've got regulations potentially mandating it. So there's definitely growing demand for high-quality recycled materials like the Pure 5 they're aiming to produce.
If they can deliver it at scale and cost, that seems to be the key caveat always.
Always.
What about competitors? Are there other companies doing the exact same thing, or is their approach unique?
The sources mention a couple of peers, like Loop Industries and Agilix, but what seems to stand out is Purecycle's specific focus. Agilix, for instance, has a broader range of chemical recycling tech for different plastics. Loop is focused on PET plastic, like bottles.
Right.
Purecycle's lane is specifically polypropylene using their patented solvent-based method. That seems to be their niche. However, the reports also kind of imply that compared to some others in the broader chemical recycling space, Purecycle is still earlier in its commercial ramp-up. That $1.6 million revenue versus maybe more established players.
So, unique tech focus, good market trends, but still very much in the scaling phase compared to some potential competitors. Did the sources mention any key partnerships or collaborations?
Yes. Collaborations are highlighted as important. One notable one mentioned is with Bruckner Maschinenbau.
Bruckner Maschinenbau, what do they do?
They're big in machinery for making plastic films. And this collaboration is focused on using Pure 5 resin in BOPP film applications.
BOPP film. That's the stuff used in high-quality packaging, right?
Yeah.
It needs to be really pure.
Exactly. It's a demanding application. The reports mention promising trial results showing they could successfully blend up to 50% Pure 5 into BOPP film. That's a good sign for the material quality and potentially opens up those higher value markets.
Okay, that's interesting. So we've touched on the tech, the early ops and financials, their market position. Let's try to synthesize this. Based on these sources, what are the main strengths and the biggest risks or red flags an investor should really be watching?
Okay, pulling it all together. Strength the first. Clearly the patented technology itself. The potential to make that near virgin grade material from waste PP. That's number one. Then there's the strong industry interest. The sources mention over 30 ongoing commercial trials. That's significant engagement.
And those specific trials you mentioned, like with Bruckner for BOPP film and also textile trials.
Right, exactly. Trials in demanding areas like BOPP film, but also staple fiber and fully drawn yarn for textiles. These require very specific, consistent material properties. Success there would be a big validation. And of course, the operational improvements at Ironton, hitting that high uptime, getting daily production going, that shows progress on the execution front.
Okay, so strong tech, industry interest shown by trials, and some tangible operational progress seems solid. Now, the flip side, the risks and red flags.
Well, the most obvious is the early stage of revenue generation, that $1.6 million in Q1. It's a start, but it's small. It highlights they're still very early in market adoption. And because revenue is small, there's an ongoing cash burn risk, right? Until they can scale up significantly and reach profitability consistently.
And that ties into the debt, doesn't it?
Absolutely. Those significant near-term debt obligations that $56 million due within a year, that's a major financial pressure point they have to navigate.
Execution risk, too, I imagine. Scaling something like this.
Huge execution risk. Anytime you're trying to scale up a complex, first-of-its-kind chemical process, there are bound to be challenges. Getting yields right, keeping costs down, maintaining quality at volume, it's tough. And then there are the external factors, potential swings in the supply or price of their feedstock, the waste plastic. And regulatory changes impacting recycling could always be a factor, too.
Okay, so potential meets significant hurdles.
Yeah.
What about potential upsides or catalysts? What could really move the needle for them, according to these sources?
The main opportunities identified are, well, first, successfully scaling up production capacity, getting more lines built and running efficiently. And second, critically, converting those 30-plus commercial trials into actual, significant, recurring sales contracts. That's the big one.
When might that happen? Did the sources give any timeline?
The CEO, Dustin Olson, is mentioned in the reports. He apparently expects this conversion from trials to real sales volume to start making a noticeable impact later in this fiscal year, 2025.
Okay, so something to watch for in the second half of the year.
Definitely. And that means upcoming earnings reports will be really crucial. People will be watching closely for signs of that revenue growth accelerating or maybe improvements in margins as they scale.
Got it. Were there any specific legal issues mentioned in the sources or any big macroeconomic factors singled out as hitting Purecycle particularly hard right now?
Based on the material we looked at, no mention of any specific recent legal troubles, and nothing really calling out unique macro pressures beyond what, any industrial or clean tech company might be facing. The focus seems very much on their internal ramp-up and commercialization story.
All right, so this brings us back to the investor perspective. How do these reports describe the overall market feeling or sentiment towards Purecycle? And what's the takeaway for someone thinking about investing?
The sense I get from the sources is that sentiment is, well, cautiously optimistic seems like the right phrase.
Cautiously optimistic.
Yeah, there's definite recognition of the technology's potential and acknowledgement of those positive operational steps first revenue, Ironton improvements. But at the same time, there's clearly a lot of caution around the execution risks. Can they really scale this profitably? That recent private placement, though, at $8.07, that does suggest some investors were willing to place a bet at that valuation recently.
Right, a data point suggesting some confidence, at least from that group. So given this the potential but also the risks, what's the final recommendation from these sources? Buy, sell.
The consensus recommendation provided in the material you shared is a hold.
A hold. Okay, why hold specifically? What's the thinking behind that?
The rationale seems to be, yes, the technology is promising, and yes, they're making real operational progress, including that first revenue, but they're still very early stage. The scale is limited. The financial footing isn't solid yet. Sustained profitability, strong cash flow isn't there. So the recommendation is basically saying it's probably wise to wait and see. Monitor how things develop. Specifically, watch how those commercial trials convert into sales and how the upcoming financial reports look in terms of scaling revenue and moving towards profit before getting more aggressive with an investment.
That makes sense. Weighing the promise against the current reality. So for you, our listener, why should you pay attention to this specific story, this Purecycle case?
Well, I think understanding a company like Purecycle is really valuable. It's a great case study in how you evaluate an early-stage company with potentially disruptive tech, especially in a hot area like the circular economy. It forces you to think about how to interpret limited financial data when the usual metrics don't tell the whole story yet.
Right. It's not just about the current PE ratio.
Exactly. And it really highlights that critical balancing act for investors. How much weight do you give to exciting new technology versus the cold, hard reality of execution risk and the long road to financial viability? It offers practical lessons that apply beyond just this one company.
That's a really good point.
Okay.
Okay, so let's try to wrap up our look at Purecycle Technologies based on these sources. Key takeaways seem to be: They've hit some important operational milestones at Ironton, better uptime, daily production. They've reported their very first revenue, which is a big step.
Yep. And their patented technology is a genuine differentiator, attracting a lot of industry interest, shown by all those ongoing trials and some pretty demanding applications like BOPP film and textiles.
But, on the other hand, they are still undeniably early stage. Revenue is tiny so far. Profitability is inconsistent, meaning there's still cash burn risk.
And they face those significant near-term debt payments, plus the fundamental challenge of actually scaling up this complex manufacturing process efficiently and profitably.
So it's this picture of real technological promise and some early operational wins.
Set against significant financial hurdles and major execution risks inherent in commercializing something new and capital intensive.
And the recommendation from the sources we reviewed reflects that balance. A hold. Essentially, watch and wait. Keep an eye on how those trials convert to sales later this year and what the next few financial reports show about scaling revenue and improving profitability.
Exactly. Monitoring those specific things, sales conversion, revenue growth, margin improvement, that's going to be key to seeing if they can really turn that operational momentum into a sustainable business over the long haul.
If you want to dig deeper into Purecycle technologies yourself, the sources suggest looking at their 10Q reports, checking their investor relations website, or financial portals under the ticker PCT. We hope this look into the source material gave you some useful insights. If you found this helpful, please do subscribe and maybe give us a like. And we'd love to hear your thoughts. Leave a comment below. What do you think about Purecycle's prospects?
Yeah, definitely let us know.
And finally, maybe something to think about after listening. When you're looking at a company like Purecycle, so early in its journey, how much weight should an investor place on that innovative technology and the exciting early operational wins, like hitting uptime targets or getting first revenue, versus the more traditional financial metrics like consistent profitability and free cash flow, which just aren't there yet? It's a tough question, isn't it?